Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 20th at about 3:30 p.m. Eastern. Before we go on, please know that all of us at ToniTurner.com and Toni's Market Club wish all of you and your loved ones a very, very enjoyable and Merry Christmas and wonderful holiday season. And now, on to the market. U.S. economic growth nudged up in the third quarter, and the economy appears to have maintained a moderate pace of expansion as the year ends. Plus, additional data shows customer spending increased solidly in November. We have seen the longest expansion in history. It's now in its 11th year, and it remains on track thanks to the Federal Reserve cutting interest rates 3 times this year. The U.S. Central Bank last week kept rates steady and signaled rates could remain unchanged at least through 2020. And on that good note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. We use it because everybody can get this on their screen. Everybody can't always get the S&P 500 index itself up, but certainly you can get up the SPY. So where we use that a lot to show where the market is and hopefully kind of get a good guess of where it's going. Now today when I captured this chart, the SPY was trading at $321.16. Again, making a new all-time intraday high today at 321.97. Of course, that's about 32.11 on the S&P 500 itself. So yet another new all-time intraday high today for sure. Now Thursday it closed at yet a new all-time closing high, another one of $320.90. That's about 32.09 on the S&P 500 itself. So we have been in an absolutely gorgeous, picture-perfect uptrend now since the end of September. We did have a little fall back here, a little pullback at the end of November, but not too bad, and then we're back up and in business again. How long can this continue? Well, that's anybody's guess. Now, if we look down here at the RSI, the 14-day RSI, of course, this is a momentum indicator, the relative strength index, we can see that, and we've been talking about this for a couple of weeks, the RSI itself has moved over this line you see here. This line on the scale is called the overbought line. Whenever the RSI on whatever asset you're looking at moves above the 70 line, it means that that asset is overbought in the short term. Generally speaking, you could say everybody's long the SPY or the S&P 500. Now we do see high volume coming in, higher volume in the last couple of days. Sometimes that's good. If price is going up, that means there are certainly buyers. Once in a while, if the market's stretched really tight, it could mean that some sellers are coming in as well. There are more market players at any rate in the SPY right now, and so we want to be smart. As I've said, the market's stretched pretty tight here. It's in a glorious uptrend. Can't deny that. Can't argue with anything it's doing, but it is getting stretched a little tight here, especially in the short term, as it is over the 70 line on the RSI. Now again, trading today at $321.16, $321.16. We see that if the S&P 500 can continue this high energy run up, if it can, or if it needs to pull into a rest stop, we do have some very nice price support and moving average support here right at 315 or 3150 on the S&P 500 itself. So we've got the 20-day moving average, the red line coming in at 315, and we have price support there as well. We have more price support down here at 310. And of course on down at about 309, 308, almost 309 currently is where the 50-day moving average is coming in. Of course that will keep moving every day, but we've got plenty of price support here. Again, if the SPY decides it has to pull into a rest stop. This is a great Santa rally, and the market likes to move higher before a holiday, and certainly that's happening. To make sure I keep my profits in place, I'm going to raise my protective stops and make sure I keep those profits going into the new year. So we're in a very bullish mode here, but be wise, and again, keep your protective stops in place. The next chart we're going to look at is a daily chart of the Invesco QQQ ETF, the QQQ. This represents the NASDAQ 100, as you know, a very important index in the stock market. It includes, of course, all of the large cap tech stocks and top non-financial stocks in the NASDAQ stock market. Of course, they're measured here by market capitalization. Now, today when I captured this chart, the QQQ is trading at $211.85. That's yet another. It made a brand new intraday high today, and it closed Thursday at $210.86. So we're almost up to 212 here on an intraday basis. If you can see this tiny little doji here, that's the QQQ today. So we're pulling this pretty tight here. Now, if we look down and see the RSI today is up for the QQQ at almost 77. It's getting overbought again. We note the last time that it got overbought, we got a pullback. So we're up in that overbought territory in the short term, again, in the short term. So who knows, we may see in the coming week if the Qs can maintain this altitude up here, almost near 212, or if it needs to pull back a little bit. Price support again sits here at about 209. We have much more support here at about 206. 20-day moving average is coming in about at that place right here. Of course, we have the up moving trend line here. We could have made a tighter one if we wanted to, but this one is certainly valid. So just like the SPY, the QQQ is moving up in a really nice channel here. We'll have to see if it can continue to move in this particular channel in the coming week. So again, this is a gorgeous Santa rally, and I am still raising my stops just to be on the safe side. Again, the QQQ is overbought here in the short term, so just be careful. Okay, our last chart of the day, I chose one on purpose that wasn't overbought. This exchange traded fund is the First Trust Internet Index Fund, symbol FND. Now this does have 41 holdings, and the top components in this is the Internet Fund. The top components are Amazon, Facebook, Cisco. Now we know Cisco's gotten pretty beat up lately, and that's starting higher again. We've got Netflix, Salesforce, and Alphabet. This is kind of an easy way to buy the big internet stocks in a fund without worrying so much about the volatility, because of course exchange traded funds are naturally diversified. So this FND is not overbought like a lot of the other sector funds or industry group funds that I've looked at today. And when I captured this chart, I don't know if you can see price today. It's right under this 200-day moving average. Actually, I can draw it for you right here. Price today is at 139.43. It's fighting resistance here at $139.57. So it's trying to push up over this line. Now, as you can see, it's made highs back here in May and July. We're up here probably about 153 at the highs. Then it's pulled back pretty dramatically. Some of the big tech stocks did pull back, and now it's moved up off of its October lows, I should say, down around 128, moved up back over, and in November, the 20-day moving average crossed above the 50-day. That was bullish, even though we had a little jump up there and fall down. Moved back up in this up move in the last week and a half. Again, now fighting the 200-day moving average. If the market keeps up here, if it stays positive in the coming week, of course, Wednesday is Christmas Day, and we're not going to have the market will be closed on Christmas Day. It probably will be a quiet week up until at least Christmas Day, and maybe even the Thursday and Friday beyond it. So it may be a quiet week. We'll see what the FDN does here. But suffice to say, it needs to move above the 200-day moving average. Now, when and if it can close above the 200-day line and close above it, so we'll say that it closes at $139.60 or higher. If it does that, I may add shares of the FDN to my trading portfolio. I will place my protective stop immediately at $133.50 just to get started. That's below the 50-day moving average that's coming in here at $134.97. So to start with, I'll place my protective stop down here. And then if FDN starts higher, I will move my stop up to a trailing stop, probably start with a close below the 50-day moving average and then keep going. Now, if the FDN can move and close above this prior resistance back here from September, I may add more shares to my position. So if the market continues to be strong in the coming week or even the one after that and moves and closes above this 200-day moving average, you may want to keep an eye on the FDN. And now on to the next week's coming economic reports. But first, please join us this coming Monday for our next session of Toni's Market Club. During our session, you'll get a mini trading lesson, and I'll give you stocks and ETFs that to trade with entries, protective stops, and profit targets. Remember, when you join Toni's Market Club, you will discover how to trade more successfully and make more money. So please join us. If you can't attend the live session, no problem. The recording is available to all of our members just a few minutes after the session ends. For more information and to join, go to the link on this screen or simply click on the button below. And now for the upcoming week's economic reports. On Monday, we have new home sales. Tuesday, we have durable goods. On Wednesday, of course, the market will be closed for the Christmas holiday. Thursday, we'll have our usual jobless claims. We'll have oil inventories that usually come out on Wednesday, but they've been pushed to Thursday, and our natural gas inventories. And on Friday, not much going on economic report-wise. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, Merry Christmas, Happy Holidays. Keep green on your screen. I'm Toni Turner, and this is The Market Now.